Joining us this morning, Stacy Rasgon, Bernstein senior analyst. Stacy's got an outperform on Qualcomm, target at 185. Stacy, what a great time to have you on. I mean, what do you make of this reaction and the overall move?
Yeah, no, you bet. So today's probably a good day to announce something like this. Now, people actually forget Qualcomm has actually sold AI accelerators for quite a while. They've had the AI 100. These look like next generation parts. So we'll see if they can compete or not. Like, I don't know, but we've liked Qualcomm for a number of these reasons. I think there's a lot of option value. They're doing this in AI. They're also doing servers for AI, CPUs for AI servers. And I've always looked at it this way, like, I don't know how big it will be for them, but what is it in my model? What is it in the street number? Zero. Like, what has it been in the multiple? Zero. Like, there's tons of option value here. So, I mean, yeah, why not? And again, people forget that maybe they weren't even aware. They've actually sold AI accelerators for years. If this is the second gen or a third gen part that they're now announcing, it takes time, right? But I'll take it. I'll certainly take it. The stock's been very challenging, and I think undeservedly so.
You know, Stacy, it's funny, when Christina was doing the news, stock was up about 2%. I took a look, up about 12% for the year. Yeah. So just to put that in perspective, in the last few minutes, it's gained well over 150% of its gain for the year. What about inference and the competition there? I know it's way early, but just give our viewers a sense as to how you see it, who the dominant providers are, and how that could change over time, and whether Qualcomm has a market share to gain here.
Yeah, well, look, I mean, so inference should be more fragmented than training. Training really is NVIDIA. That's kind of where it is. Most of the other players that have really been trying to push and have been trying to push into inference, because you can make the argument that some of the workloads may be more specialized, they may be more, power and everything else may be more important, and so there may be more room. Inference probably long-term is also the bigger TAM, and at least it better be, right? Because if you're looking for usage and adoption, that's where it's going to be. And so I think there's a point of view that there's more room for more players to exist in inference versus training that really has been owned by NVIDIA. And again, if the markets are as big as people think they are, it doesn't take a lot. Again, a small, but this has been the bull case for a number of these guys. Like, a very small slice of a very big pie could be big enough. Why shouldn't Qualcomm be a beneficiary of a thesis like that as well?
I mean, yeah, we also have some of these private chip companies as well. We've had a few of them on. I mean, some of it could be somewhat unproven, but what does it all mean for NVIDIA as we move? I mean, I know models will still be trained, but ultimately, to the extent that inference is going to be more competitive, is it a threat to NVIDIA's lock on the market?
Yeah. So, look, I think NVIDIA does and will do just fine in inference as well, and it's the same thing, like, people make these same kind of arguments between, like, for example, like GPUs and ASICs and which one's winning or losing. And I still think we're too early for that. I think the right question today is not which one's winning or losing, or is the opportunity still big or is it not? I mean, if it's still big, the pie's getting bigger. There's enough room for lots of folks to benefit. If the opportunity is not big, everybody's screwed. Right? So that's the question that you need to have confidence. I still think the opportunity is still big. I think we're still very early here.
Does it change the pricing dynamics, though, if there are more entrants into this space and more competition? Does it drive down prices? I mean, to your point, NVIDIA moved down a little bit, but it's still up 1.5% today. So clearly, investors don't see it as this existential threat to NVIDIA, but I'm just curious over the long term what it means for just their margins for this type of chip.
Well, again, for NVIDIA, I think the big question is not so much, what are they charging? It's can they continue to improve the performance? So that, their pricing is going up with every generation because their costs are going up with every generation, but they're improving performance much more. And just for an example, you went from Ampere to Hopper. The pricing basically doubled. Performance went up 10x, like no problem. You went from Hopper to Blackwell. The pricing went up, 50%-ish, give or take. Performance went up anywhere from 3 to 30x. Again, no problem. You can pass that along. The total cost of ownership, the TCO to the customer, is getting better and better with every generation. As long as NVIDIA can keep improving performance at those kind of rates, I don't really worry about their margins. And by the way, they're aware of this too. Like, they've talked about this in the past. They want to improve GPU performance by 1,000,000x over the next 10 years. If they can do that, I don't worry too much about their margins. If they can't, then I would start to worry. But that's what I'd be watching for.